The Bay Area housing market has been on fire for the last year. However, we're starting to, in the South Bay, see some signs of a slowdown, especially in the high end. And that's what we're going to be covering on today's Bay Area Housing Market Minute. Higher end homes have actually been selling like a wildfire over the last couple of months here in the Bay Area and in Silicon Valley especially. And it's interesting because a lot of times the luxury higher end homes take a while. They take more time to sell. But in most luxury high-end cities, we are actually seeing way higher than normal activity levels, way lower than normal inventory levels. And so that has been a recipe for a white hot market, not just in regular Bay Area cities, but even in the higher end cities. Today, I want to focus on Los Gatos and really dive into the data because there are some leading metrics of a potential slowdown that I want to make everyone aware of. But before we go into the data, if you are a home buyer in today's Bay Area market and you're looking for a comprehensive data set to assist you in your home buying decision making, you can go ahead and text the word data plus the zip code or neighborhood or area that you're looking in, and we will send that data straight to your email inbox. And if you are a home seller in today's marketplace and you're looking for a data set to assist you in your decision making and or pricing your property, you can go ahead and text the word data plus your property address to the number down below, and we will send that straight to your inbox. First things first, let's start off with some positive news. We see here 106% sales price to list price ratio. That means for a home that's sold for $2 million, the average sales price would have been $2,120,000. So for every home that was listed for $2 million, would have sold for $2,120,000. And this is not new for a lot of cities in the Bay Area, but especially in higher end cities like Los Gatos, to see consistently, if you see here on your screen, 5 straight months of net positive sales price to list price ratios. That is indicative of a white hot market. And if you've been watching my videos for any period of time, you'll know that what I say is whatever happens in the high end, whatever happens in the luxury market eventually trickles down to the rest of the market. And so to see such ridiculous things happening in the higher end, it trickles down to the rest of us. And this makes sense, right? Like if someone can't afford the $4 million home anymore, they buy something else that was once worth 3.7 for $4 million. Why? Because, well, shoot, that's what it takes to win. And so you start to see that, and that puts upwards pressure on prices because everyone is chasing the market. That's what's been happening for a while. However, we're starting to see signs of a potential slowdown. You notice on your screen here, inventory levels represented in the light green line in Los Gatos are actually exceeding pending inventory. And for the last, 6 months or so, 5-6 months, we have seen pending sales outpace inventory. Now, want to be clear, you don't need pending sales to outpace inventory in order to have a very healthy seller's market. This is abnormal. This is only really happening in Silicon Valley frequently. It has been happening in a lot of parts of the country as of late, but frequently speaking, that only really. But speaking in just in layman's terms, this doesn't happen very often in most parts of the country. Period. Here it does. In Los Gatos, it's less than 50% of the time. And so when you see pending sales outpace inventory for so long, that all that does is put upward pressure on prices, upward pressure on prices, upward pressure on prices. But now we're starting to see not just a little difference, but now a pretty large discrepancy, delta, in the amount of homes that are for sale versus the amount of homes that are pending. Is this signs of a potential slowdown in Los Gatos and potentially the rest of the Silicon Valley marketplace? That remains to be seen, because it could be one of two things. It could be signs of buyer fatigue and buyers withdrawing from the marketplace and more sellers thinking, hey, this is the right time to sell because you see inventory levels are also going up. But could also be signs of a summer slump, which actually, if you've watched any of my previous videos, you'll know that it's very common in Silicon Valley and in the Bay Area housing market to see to see this sort of slowdown in the summer months. Why? Buyers go out of town. They, again, get buyer fatigue from the spring, but then they come guns blazing in the fall months once school gets back in the swing of things and everything, and they're like, all right, honey, well, before the new year, we want to be in our new place. Let's resume the home search. And so it remains to be seen whether or not it's the former or the latter, but we will find out in due time. It's important, though, that we continue to monitor these as we move into the fall months, because if this continues to happen, we're going to see potentially a neutralization in the marketplace. But before you get too far ahead of yourself and think, oh my gosh, it's going to happen, I'm going to be able to buy a $3 million home for only $2 million, not so fast. In July of this month, we saw 1.4 months of inventory levels based on closed sales, which means that the inventory could double, meaning that we have 80 homes on the market right now. We could have up to 160 homes, and we'd still be in what economists would consider a seller's market. So we are still a far, far ways away from the market neutralizing or coming to homeostasis, if you will. That being said, if you look at the absorption rates and inventory levels relative to the amount of demand, this month we had 71.3% absorption rate, which means that for every home that was on the market, 0.7 homes sold. Now, what would need to happen is we need to get below a 33% absorption rate in order for the market to stabilize or neutralize, specifically in Los Gatos. Now, in order for that to happen, if inventory levels were to remain the same, we would need to see pending sales dip or closed sales dip by over 40%, which means that 40% of the buyers would need to go away tomorrow. That's not going to happen overnight. Now, could we start to see where inventory levels creep up 10, 20% every month and buyer demand drop to maybe 5% every month? Yes. So pay attention, continue to tune in to the Bay Area Housing Market Minute to stay up to date with what's going on in Los Gatos and the rest of the Bay Area housing market. This is Danny Gould, everyone, with Selling Silicon Valley Group, and I will catch all of you in the next video.